Well, Mahdi, thanks for joining us. You know, maybe you could just start off by telling people who you are and where you're at in the sector of California, just so our investors have an understanding of where you sit.
We're one of the larger bulk cannabis distributors in the state. We have 3 different distribution locations, 3 different licenses, and we're also, we own 2 cultivation farms. But we focus on bulk cannabis.
And, you know, it's been a great relationship with you guys to really have a distributor where we're getting real-time information from, at least the team is. I don't get it as often as they do, but I've been fortunate enough to be with Henry a few times when we go to your facility. And maybe you could just tell us a little bit of how you're seeing the industry evolve and change. And now that we're here at this event, maybe some of the things that you learned and where you think things might go for the state, and how we can be more successful in our operations of how we're being vertically integrated.
Well, I think things look good for the state. There's segments that need help. Cultivators, price per pound is an issue, but there's all this room for growth because it's an underserved state. So like we don't have enough shops for 40 million people. And then the question is, why don't we? And how do we get more people buying from shops? And there's all this room for growth. So to me, it's like the perfect opportunity. There's a lot of opportunity in the industry, and you have a lot of devalued assets. So it's a good opportunity to get in now and build businesses. So I'm hopeful, optimistic, and I think the retail side, there's a lot of room for growth. We have a lot of cultivators. There's challenges with cultivation, with bulk cannabis pricing. It's the lowest prices we've seen ever, and that presents challenges, and it makes operators have to operate more efficiently than ever, and get the highest yields they possibly can, grow the best strains they possibly can, and have good distribution partners like us to help them move the product.
And one of the things that I thought was fascinating is, to the extent that you can talk about it, is the relationship that, for example, that you have with State House, and how that you're able to work with State House in a way that smooths out the highs and lows of the market, and how that kind of works.
Yeah, I mean, the best thing a distributor could do for a farm is create stable pricing by marketing that product to the right buyers and getting them to buy in that through the course of a year, we need to maintain certain price points so that it's healthy for the farm, and it accomplishes your goal, whether you're a brand, whether you're, whatever you're doing with flower, right? So I think as a distributor, I look at it and I say, here's the product that we have from State House that we have to sell. Here's how it aligns within the industry. Here's what it'd be as far as like pricing, and then here's the volume that we have to sell, and how can we market it better through our brokers, through our sales staff, and find the right buyer that's going to create consistency for us throughout the course of a year.
And how have you seen that change with the relationship, obviously, with State House, obviously being one of our largest assets that we have? What have you seen change in the last, say, 6 to 9 months in that operation of that
I think
company?
it's the main thing is when you have people that come in that ask the right questions. So as a distributor, the most important thing is, so if someone comes to me and he's asking all the wrong questions, I look at it and I say, we will never be able to work well together, because you will have a failing business eventually, and I will spend this money and time and energy to market your product, and you're never going to improve and become more efficient.
Interesting.
And so it's just a matter of time before you're going to go out of business. And a lot of farms are like that. But I think, one thing is when you guys stepped in, when you guys came in, you asked the right questions. You said, how can we do better? What are our problems? How do we compare to the industry? Where do you see pricing going? Where are we now? Where are we going to be? And how can we do better within this space? And I think a lot of people within the industry lost hope and just renewed energy when it comes into a door, into a business, and says, we're going to fix these little things. And it's a lot of little things to fix and to lead to bigger things. And we're going to run a successful business. And sometimes it's really about you step in, you say, and the people that are there, the old culture might say certain things are impossible. And then you step in, you say, no, it has to be done.
Yeah.
There's no impossible. It's about survival. We have to change the way we do things. And for me, as a distributor, I can get behind that.
Yeah.
And
I thought one of the most interesting things is how important the personality relationship is with one of the key guys at State House that you work with. And that relationship is such a powerful thing that you have.
It's trust.
With Brad.
Yeah.
And it's just amazing that one guy and the relationship that you have, the two of you have, is such an important relationship. And I don't know how many years it's taken to build that,
Yeah.
but without those types of relationships, you're going to have
5 or 6 years.
a tough time surviving.
Yeah.
I think one of the interesting things that we've learned a lot from you and we've talked a lot about is the value of getting to scale. And you do distribution at scale better than probably anybody in the industry. And you touched on the value to the farmer over the course of a year. But I think when we look at the scale and the data that you have, it helps on the operation side, the opportunity cost of, can we get $50 more per pound today versus we have to move 36,000 pounds this year?
Yes.
And what is our total average price to move that? And I think having a relationship with your group, and we know the data that you track, you're able to actually make a forecast of how to do that, and you save not just the time, but the energy, the resources of having to go around the state to find which distributor is going to give you that incremental $50 a pound.
Yeah.
But over the year, it makes a lot of sense.
There's certain things that are realistic, certain things that are not. At the end of the day, there's flour, and you're competing in a market that's oversupplied with flour. But you can find your niche, you can find your market, and you can do better incrementally. Now, when it comes to pricing, a lot of times, $50 today is $100 lost tomorrow. And so when you asked about the question with Brad, and the thing is, so I go, okay, we have to move 36,000 pounds. It's a strategy to move 36,000 pounds. It's not about $50 now, quarter now, this, that. And the reason why is because even if I gave you an extra quarter today or extra 50 cents today on this load and you're really happy, and then the inventory gets backlogged, and then you're stuck with 2,000 pounds. Mm-hmm. And now for me to sell it on those 2,000 pounds, I have to pay you $150 less. Mm-hmm. So now in the course of the year, you actually average that less. So it's for you to get $50 more that one run that week, you
tie up your capital,
you tie everything up, and then now you call me and you're like, I have another 500 pounds, and I'm like, okay, well, I'm still sitting on 400 pounds. Mm-hmm. That was overpriced by 50 cents. And yes, you won this week, but now in 2 months, you're going to be sitting on 3,000 pounds at $150 less.
It seems like that's almost an art. And I know that you had previously told me that you are having to price it, not for today's price, but for in 2 weeks. Yeah. And so you're having to front run what is happening in the whole market based on your data points that you have. And that seems like it's some data, but some art too.
Yeah.
Maybe talk about that.
As a farm, it's very difficult for you to know state price, like the price regionally throughout the state, because you're in your own bubble, you're in your own region. You might know what your neighbor's selling pounds for, what his looks like, but it's very difficult for you to know the flow from different regions.
Gotcha.
And look, this is a plant. There's harvest schedules, there's harvest times, right? If everybody's harvesting in September and October, and you're seeing, within a month, an increase of 50-60% in inventory, I know that. So I know if I buy something from you, I have to price it knowing that in 1 or 2 weeks, there's going to be a flood of millions of units that are going to be coming down. And how is that going to impact our flow? Because I cannot have those units replace your units.
Yeah. Gotcha.
So now I have to compete with that extra inventory that I know is coming down. A lot of it because it's seasonal changes.
Yeah.
In the summer, you get more yield.
Yeah. It's interesting that you just touched on something that I hadn't thought about, is that regionally, you might, because you know what the price is in the different parts of the region, and a cultivation may only know just their own universe of who they've got. You could get that extra $50 per pound or 25, whatever it might be, you can just stay consistent with the pricing, but you can move it to other parts of the state where you know that that market is undersupplied or there's some margin still there.
Exactly. Even Humboldt, you know, it's a big region. There's a lot of flower coming out, but sometimes, you know, around August, they're waiting for their September harvest to come out, and a lot of the distros up there are low on inventory. So they'll be coming down south to buy it. Imagine distros from Humboldt buying down south. So yes, there's regional and market inefficiencies based on region, and part of the distro's job is to know those inefficiencies, know those regional changes in pricing based on inventory that's available, and our job is to, you know, we can make money off of that information and then also create stability for our seller, because it would be very difficult. I mean, for our farm, because it'd be very difficult for a farm to know that right now your pound is worth more in Humboldt than it is in LA.
That's crazy.
There's regional differences in price, and the other part of it is so the LA market is less is more indoor. Like I consider LA, Inland Empire, San Diego. So sometimes the indoor market here is more flooded, and then the outdoor market or debt market in Humboldt a lot of times is more flooded. So there's inefficiencies. So then the Humboldt guys, so when if a pound drops by for indoor pound for $150, the Humboldt guys are down here shopping all day, because they have buyers there that want some indoor, some depth, some outdoor, and then they're like, okay, let's go, you know, Southern California. That's where the price is right.
With the amount of velocity of seeing what's happening in all these different dispensaries and taking it from the cultivation directly and having your own, what are you seeing happening, and where do you think it's going for California?
Well, we're in an oversupplied market when it comes to bulk flower, right? That's not necessarily a bad thing. It's because it's 40 million people in California. The market's underserved when it comes to retail. There's a lot of room for growth, and I think 3-4 years down the road, 14 million pounds for California will be just enough. It's not now. And so I look at it as, how do we make flower more accessible to more people at a better price, so that we can grow this industry and not be dependent on high taxes on a small percentage of people, and focus more on low taxes on a larger percentage of license holders. So if, you know, to buy an eighth, it's 40% in taxes when you calculate all the taxes, right?
Yeah.
Why would somebody go buy from a retail location when he's paying 40% more,
Right,
and he's a daily consumer? It just doesn't make sense. So if you say, okay, that tax is 15%, we're going to cap it out. It's 15%, but that's going to help us because we're going to have, you know, 4,000 new retailers. Well, that's new retailers getting more tax in at a lower rate, but you're actually moving the product more, and now you have buyers buying from your retailers and not from the black market.
Yeah.
So it's, you know, the healthiest way is for us to grow this industry as fast as we can, so we don't have to overtax retail. And then how do we do that? That's the challenge. And then this is why we come to these conferences, to have these meetings and then see what people are thinking, what their solutions are, and how you can add to that what you know. But I will tell you this: it's always bleak in any industry when you've had like this kind of rise in cannabis, and then you've had this kind of drop, and you're seeing, you know, distressed assets, frustrated operators, some of them good operators, some of them bad operators. And people start weeding themselves out, and then assets become available. But in the way I look at it, I'm like, this is the perfect time for expansion, because you can accomplish more today with the prices. I mean, when a farm calls me and says, just take over my operation at no cost to you, just pay the operating expense, I'm like, great, that's opportunity. Okay, because I know he spent $14 million in that facility just 4 years ago, and I don't have to spend that $14 million, so it's going to be a lot quicker than I can get my money back than he could have ever gotten it back.
What I tell people is, it's not only the cost, it's the time.
Yeah.
So it would take typically a year at least to build that, and then another 6 months to dial it in.
Yeah.
So you just saved all of that OpEx,
Exactly.
as well.
Yeah. CapEx, OpEx, it's just like, and so now I have a higher chance of success because I'm starting out with less of an investment. So I could take over that farm. These guys spent $14 million. I could probably take over the farm with $2 million in OPEX. And then now it gives me more runway, gives me a better opportunity because I could build off of what they had, fix the issues that they had, and know more about what's going on with them too. Like, because we might have distributed this product, we kind of saw their challenges. And again, it goes back to like regional challenges. If the farm is in a region that there's a lot of heat, it might just need AC units. If it's in a region where there's a lot of moisture, it might need dehumidifiers. If it's, like stepping in, understanding what the problems was it genetics? Was it operations? Was it, the structure, whatever it is? And then finding those opportunities. And then, so for us, like we acquired 2 farms in the last 2 years, and it's been difficult because from the time we acquired them, prices have came down. But it just means you have to run more efficiently and find the right strains that yield well, and ultimately there's a price per pound that makes sense for quality of flower. And if you're not trying to achieve that and compete with the best guys in the industry, the biggest guys that are growing at scale, you have to be able to compete with them.
Yeah.
And grow at the same price per pound, or else you're not going to have a chance.
And how do you think about having a farm yourself and being a distributor and looking at watching brands and what's happening with with brands? How do you think that people without brands are gonna? How are you thinking about a brand for
everybody's dream when they started in this industry? I mean, like this is going back 6-7 years was vertical integration. I'm gonna create a brand. I'm gonna grow my flower, and I'm gonna sell it through my retail. And this is the way it was meant to be. Well, at one point or another, it became very, very difficult to grow flower because it's oversupplied. And then now you're not selling the same amount through your brand. So say you grow 500 pounds and your brand only needs 200 pounds. Well, the other 300 pounds still has to go to wholesale market, in which you're getting a lower cost, lower price for. And then, but you're still carrying the capital costs of a farm. And you only need 200 pounds from your farm.
Yeah.
But there's still 300 more pounds to deal with.
Yeah.
And then on top of that, you see the challenges with retail and getting paid from retail, and their struggle. So it didn't play out the way it should have. But now, with what the prices that you can get in now, with you can create that same system, having a complete vertical integration at a minimum cost that what it would have cost you back then to, the people that I bought my farm from was a brand, right? Dr. Rob. And they said, okay, we're going to market this guy, Dr. Rob. We're going to build this farm around him, and he does great flower, and then we're going to sell it to the retail stores. Well, it didn't work out. Okay. It was very, 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 very difficult at a bad time in the industry. But now, okay, sign me Dr. Rob, it'll be another brand. And then now we could pop up, and now we've built in some efficiencies. We've figured a lot of things out. We can build a brand around the farm and have retail.
So you almost de-risk it, almost, that maybe not as much with that asset, but some of these assets, you've de-risked it because they're handing you the keys, and they're getting not able to maybe be cash flow positive, but by getting into a bigger ecosystem, they can get.
Well, they look at a hole they'll never be able to get out of, and at one point or another, the company loses will.
Yeah.
So they're like, we have to get out of this $14 million hole, and we owe all these we owe all these people, and at one point or another, the company just starts looking around and saying, we're never getting out of this hole,
right?
And things aren't going as planned. So why are we doing this in this difficult industry? And like when morale within a company is dead, and there's no way out, it's just a matter of time.
The beatings will continue until morale improves.
Yeah, exactly.
Yeah.
And that's why sometimes like the most important thing is just like now you get a fresh reset, a restart. You're not buried $20 million or $15 million, and now the goals are achievable.
What does that look like for the first company that has a clean balance sheet that's vertically integrated in the state?
Right now, cash is king. Cash is king, and then there's all these assets available for sale, stores, farms, and I mean the way I see it is, if you step in with cash right now, you're buying everything at a deep discount, which gives you a way higher chance of success, whereas you didn't have this before. So like, you know, would you rather buy Bank of America stock at $20 or at $5? It's, you know, bottom line, you don't want to buy anything at the top of the market. Everyone bought it at the top of the market. Now, here we are, we're at the bottom of the market. These assets are deeply discounted. And you can step in and really buy everything up and create an ecosystem within your company. That's very easy because, like, once you have an outdoor farm, a light assist farm, a light depth farm, and an indoor farm, and you can create brands around all of those, and you could sell those through your own retail locations, you have it all.
You have the entire market.
You have it all, yeah. So,
And, you know,
And the ability to source any flower you need from the largest wholesaler in the state.
yeah, we make everything available.
and so when you talk about vertically integrated, one thing that seems to not necessarily be included is distribution. Can you talk about including or discluding what the benefits and disadvantages of being vertically integrated with having your own distribution?
Well, it's different. Do you want to pay 10% for everything you buy in your stores? Mm-hmm. It costs you 10% to have an outside distributor distribute to you.
Gotcha.
And when you have your own distribution, you're saving 10% on that product that you're producing yourself. So you should be self-distributing it yourself. And you have enough stores to do that. You're not just one store.
Yeah.
So one store hiring a driver, a van as extra cost. But if you're sitting on, you know, 10, 15, 20 stores, then it makes sense to do self-distribution, number one. Number two, it's your store is never going to have everything that it needs. And your distributor is the one whose job it is to find you what you need.
Oh.
So it's
Gotcha.
it's you. If you call me and you say, hey, listen, we're not selling enough high-end flower that's around $60. What do I do? And I can tell you, this is what's selling. This is the best product. And if your buyers buy this, they're going to come back for more. And then and I can give it to your store, and I can float it to your store, and build a brand and help you sell that brand through your retail. We give you a higher chance of success because we see all the flower in the state.
Interesting.
So-
Yeah, it sounds like at least having the relationship with you guys is mission critical.
Yeah.
For multiple, from data, but also for consistency of being able to move the amount of product that we have to move out of the largest facility. But that maybe there's some strategies here in the future of how to be more strategic in how we work together.
Yeah, absolutely. And a lot of the stuff will play out with the state and everything that's going on right now with expansion and stuff like that. But I think, you know, you guys are doing what you do, and it's great, on the right path, exactly where you need to be, well capitalized with a lot of opportunity. And then we're looking at it the same way. So when we talk to you guys and we're like, oh, we're not the only ones that see this. These guys see it too. It's just like opportunity. Because, you know, at one point or another, you're looking around and you're like, does this even make sense? Like, why would something be at such a discount? Like,
Yeah.
what is it that we're really looking at? So I mean, in the talks that I had with you guys too, I was like, it's not just me that sees this.
Yeah.
So this is an actual thing that you can step in and take over these assets at deep discounts and give yourself a better chance of success.
I think the investor fatigue is so real. So you got operator fatigue from being beat up in the industry, and then you've got investor fatigue. And even if they weren't a direct investor that's taken equity loss in that side, they know about it. And I think that one of the hardest challenges that is out there is for investors to look at this with fresh eyes and understand that you're basically coming in at a basis that is so different than what the market was before, and you've effectively eliminated most of the execution risk. And you know, these assets can be aggregated into a working model that already exists.
Yeah. I mean, at the end of the day, you get way higher chance of success today than you ever have in the cannabis industry. It's a more mature industry. And then if you own, you know, it's really easy to go from 10, 15 shops to 100 shops right now than it was 5 years ago. 5 years ago, the capital contribution you would need, the amount of, it just would be very, very difficult. Right now, it's a lot easier capital. And the way I look at it is this. Do you want to own something at a discount? There's going to be consolidation within this industry. There's no doubt, right? Because, you know, industries go up, and then there's failure within industry. And then there's going to be groups that step in and clean up and take those assets. Are you going to be one of those guys? Or are you going to just sit there?
Yeah.
Because ultimately, someone's going to step in
Yep.
in the next year or two, go from 15 shops to 100.
Yep.
Because it's at a discount. It's advantageous to do it now. And if it's not going to be you, then it's never going to be you. And then what better time to get back into an industry?
Yep.
And it's a growing industry. Okay. You know, like I was just talking to a wine guy, and he's like, yeah, all the new Gen Z guys, they're not drinking alcohol anymore. They're all smoking flower. I'm like, okay, so it's an industry that's growing. Okay. It fits the new demographic. And then, so all we have to do is just figure it out. We don't have any
It's not
major
disappearing.
headwinds.
Yeah.
You know, like major problems within the industry. Like there's nothing that's preventing us structurally from growing.
Well, all the ones that were deal killers, we figured out a way to get through it at this point.
Exactly.
Now that if you can get if you can clean the balance sheet and you can get that basis down low enough.
I would tell my investors, why would you give up on an industry only 6 years into its birth? Like I'm saying, like
Yeah, right.
that you would
It's like
never.
giving up on the internet in 1999.
Yeah, I'm like, okay, there's 6 years in. Like this is the newest industry in America. 6 years in, the investors are like, oh, we're tired of this already. I'm like, dude, come on. Like it doesn't make any sense to me.
Yep.
And I think a lot of it is not understanding it. You know what I mean? Like if you're in it, you understand it and you see it on a daily basis. To you, it makes sense. And if you're an investor, it's kind of new, it's foreign, and there's all these stories out there about things that happen to other people. But at the end of the day, it's like, you know, like any other business, a good operator, okay, with vision can make things come true.
Yeah.
And then in this industry, we had a lot of bad operators with no vision, and a lot of money in their pockets, and they made a lot of bad decisions.
Yeah.
They didn't run clean and efficient.
On the other side of that, you don't hear about the borrower or I was going to say our borrower, but you don't hear about the operators that are doing well, which we know who those are because some of them are our borrowers. And so you don't hear about the successes. You only hear about the failures. And I think that drives the narrative that it's completely impossible to be successful in California.
Even when you're having success, when you know your customers are paying 40% in tax, you're going to complain.
Yeah.
I'm saying it's like if I know a guy steps in to my retail location, he's paying 40%. I'm going to be like, this is horrible. You know what I'm saying? Like that. It's just like, okay, it's because you know there is regulatory. So I say there's a narrative that you create because you know there needs to be change, but it doesn't necessarily mean that you're not doing well.
I see what you're saying.
Yeah, like I complain every day. I'm like, this sucks.
Yeah.
I have to deal with this.
But you're making money.
But I'm making money.
Yeah.
Okay. And so
It's like complaining about the casino commission in Vegas.
if you're not complaining about something, you're not looking to get better at it.
Right.
You know what I'm saying?
Yeah.
Like you're
Business is
like
solving problems.
solving problems.
I think that's a good point to make about the narrative out there. Nobody's writing about the narrative of how we're doing well, and nobody really wants to share that they're doing well because they really don't want people to know how they're doing it. I think that that's an important part, and with State House and being rebranded to the new Standard Golden Collective company, we're going to have that first opportunity to share how you can be successful in the state, being vertically integrated and adding to the portfolio of dispensaries and more brands and selling on an average blended price per gram as opposed to just wholesale. And we're just trying to defrag our costs by that wholesale stuff.
Yeah. I'll tell you this. If you're an operator and you're on Instagram or, TikTok or whatever every day crying about the industry, and then every month you're posting about your new grand opening, I don't know. If it's so bad and it's so horrible for you, why is it that every month you're opening a new shop?
Yeah.
It wouldn't make sense, right?
Yeah.
So yes, is it perfect? No. Is there things that we need to fix? Yes. Are we overtaxed? Yes. Are we oversupplied? Yes. But this is very early in an industry that has a lot of hope in a market that's only growing.
Yeah.
And so like I say, it's still early, and now we've had a reshuffle and a consolidation, and we're going to look back 5 years from now. There's going to be 4 or 5 guys, the Googles, okay, the Apples, that clean up house, acquire the smaller guys that have little good operations, and only 5 or 6 guys are going to rise from this California market.
Yeah.
The question is it going to be you or not?
Yeah.
That's it.
Yeah.
I mean, there's going to be a group that rises.
The beauty of it is we're, unlike other industries that we're emerging where we're speculating on the size that they could grow into, we have a level of confidence because the industry already exists.
Yeah.
It's just about converting more and more of this illicit market to the legal market, which will inevitably happen over
Yeah.
time. But we're not speculating. The size is already there.
There.
It's just converting it.
It's
into-
40 million underserved people in retail.
Yeah.
I'm saying like
in the
like,
fifth largest economy. in
You're
the
not running into a problem where you're like our market is not big enough. I mean, isn't that the best thing in any business that you start?
Yeah.
The first thing you look at, what's the size of my market?
Yeah.
It's only growing, and we're only feeding 10% of it. So it's like,
and if
it's the
there's-
best time to be in it.
And if we can't bet on when we ever are allowed to have true interstate sales, you might as well have the most potential customers within your state.
Yeah. I mean, yeah, it's like, it's California, fourth largest economy in the world. Okay. Cannabis is going to make it. It's going to be a successful industry. It's impossible for it not to be. Like, this is the mecca of cannabis.
Yeah.
Okay. So like, you're telling me in the mecca of cannabis, it's like saying like, Silicon Valley is not a good place for, internet companies or like software companies.
Right.
I'm like, come on, dude. Like, this is Silicon. Like, if you want to make it, you go there and
Yeah.
you figure it out.
Talent.
That's where talent is.
Yeah.
Okay. That's where knowledge is. That's where you go. And then everyone kind of figures it out. Now, is there going to be issues? Is there going to be some things that you got to work through? Yes. I think there was a lot of irresponsible people in this industry that got a lot of money too early, and they did some dumb things. And we're not good operators. We're not good businessmen. They had all this money and they just wanted to spend it on anything. It's like, okay, it's a 50,000 square foot kitchen. How many gummies are you selling? 2. Build it.
Yeah.
You know what I'm saying? I'm like, okay, it's like, it's spending the money spending money on things that you might need 5 to 10 years from now, and you're spending it today because you have the money today.
Yeah.
Right.
It's the worst way to run businesses. And I think a lot of the horror stories that you see in this industry that are like, oh, look what happened to these guys, remember those guys? That's what happened.
In my mind, I can
Yeah.
see many of those facilities being built, and
To focus on allocating the capital to win the game today, keep
Yeah.
an eye on where things are headed.
Yeah.
And from our standpoint, partner with the best operators to keep a view of what's happening on the ground and make sure that the businesses are well run and you improve them every single day
Yeah.
incrementally.
I think if you could make it out of what we've seen now, you could make it out of anything.
Yeah.
Like, it's just, like, we've already hit the bottom. Can't get any worse.
Yeah. Yeah.
And so now is like the best time because only, like, there's no more headwind. It's free sailing. It's gonna be a lot easier than it was before.
well, thank you for sharing your insights. It's really
Appreciate
helpful
it.
to
Appreciate it.
get,
Thank you,
get
guys.
real time
Yeah.
information.
Appreciate the relationship. You guys have been awesome. So yeah,
We're excited.
The trust.
Cool. Thank you.
Thank you.
A lot of growth.
Appreciate it, bud.